Hey, what's up, my friend? So in today's training, you will learn a momentum trading system that has generated 535% over the last 19 years. You might be wondering, so Rayner, what's the annual return, man? Well, let me break it down for you. The annual return of this trading system is about 10% a year with a maximum drawdown of 22%. To put things in perspective, the S&P 500, if you buy and hold it over the last 20 years or so, annual return is about 8 to 10% a year with a maximum drawdown of 55% or even more, depending how far back you look. So you can see that this system has a similar risk profile as a buy and hold approach, but with much lower risk. And the best part about this trading system is that it takes you only 5 minutes a month. So you have the freedom to do the things you love. This can be like your retirement trading system, and this is as close as a passive income as you can get because it only requires 5 minutes per month. So if you're interested, then today's training is for you because I'll walk you through the concept behind the system, the exact trading rules, the entry, the exits, chart examples, and much more. Sounds good? Then let's get started. So what is momentum trading? So momentum trading is a strategy that goes long on market that have shown the best momentum, the strongest momentum. And the way we define momentum is very simple. It's kind of like, imagine like acceleration. How fast did something move over a given time period? So for trading, we're looking at how many percent increase did the asset price move over a given period. It could be over 2 months, 6 months, 12 months, etc. And the reason why we are looking for markets that have shown strong momentum is because it is likely to continue higher. So the concepts behind this strategy is to identify markets that exhibit strong momentum. I'll share with you shortly how we define momentum, and we're going to hold the position till momentum stalls or show signs of weakness. So let's have a look at this trading system. It's pretty unique and something that you might not have come across before. So this system, we will be trading the ETFs market, exchange traded funds, ETFs market. And the reason we do this is because I just want to give you a different flavor, exposure to the different types of trading systems out there. Can momentum trading be applied to the stock markets? Yes, I could go down that direction, but for this video, I figured, let's do something different. We'll trade ETFs instead. And again, these ETFs are readily available. You can easily find them through these different tickers over here. Like we are trading gold, the ticker is GLD. We are trading S&P 500, the ticker is SPY. Then we have TLT, which is the Treasury bond, and DBC, which is the commodities market. The time frame is monthly. How often do you come across a trading system that trades once per month? And the beauty about this system is you only need 10 minutes a month, and that's it. And you will have a system that has consistently beat the market. So I'll get to that shortly. And for risk management, 50% of your capital for each, my bad, this one shouldn't be stock, this one should be ETFs for each ETF. And a maximum of 2 positions. I think you're probably familiar with what this means by now, because I covered that in the previous system. If you are struggling with what it means, then just go back and recap. And because I'm a little bit of an OCD, I'm going to change this right now for each ETF. Okay. So let's have a look at the rules of this trading system. The rules of the trading system is really simple, as you can see over here, just 3 lines over here. First one, the ETF is above the 200-day moving average. Why do we do this? Think about this. I'll give you 3 seconds. 1, 2, 3. The reason is simple. We want to buy or go long on markets that are in an uptrend. So markets that are in an uptrend and they have shown the strongest momentum, we want to buy those markets. But first, we want to make sure that it's in an uptrend, and we do it by making sure that it's above the 200-day moving average. Second one, for the ETFs above the 200-day moving average, next thing we're going to do is to rank them according to their rate of change. Simply put, right, we want to rank them based on their price performance over the last 12 months. So let's say, let's keep it simple. Let's say 1, 2, 3, 4. Let's say ETF 1, ETF 2, ETF 3, ETF 4. Let's say ETF 1 over the last 12 months, it went up 1%. ETF 2 went up 2%. ETF 3 went up 10%. And then ETF 4, let's say, dropped 5%. Now ask yourself, which among these 4 ETFs, which are the two best performing one, assuming that they are all above the 200-day moving average. I'll give you 5 seconds. 1, 2, 3, 4, 5. Okay, the answer is this one and this one, because they have the largest price increase over the last 12 months. And if you're wondering, how do I have that shown on the chart? Rayner, can you show me which indicator do I use? What is the rate of change? Don't worry, I'll get to that really shortly. And finally, the last one is just to go long the top two strongest ETFs, which is what I've just explained previously. Okay, now let me walk you through how to go about finding, or rather identifying this system, right, using TradingView charts. So first thing that we want to do is to remember we are trading these four markets: gold, S&P, bonds, and commodities. So what you can do is that if you want to trade this system, you can create a new watch list if you want. Let's see, how do we create a new watch list? Okay, over here, I would then, let's say, create a new list. Let's call this ETFs. Okay. And in ETFs, let's add in the four tickers that I've shared with you earlier. GLD is one, SPY is the other one it's DBC, which is the commodities, and we have TLT, which is bonds. Okay, we have all four ETFs. So now this is done on the, I think I forgot to mention, on the first trading day of each month. So right now, as I'm shooting this video, it's like the 10th of July. So you should always do this, or rather preferably do this on a fixed trading day of each month. And for the rules of the system I shared with you, the backtest was done on the first trading day of each month. So the first trading day, let's assume that whatever you're seeing now is the first trading day of each month. Okay, assume that this is the first trading day of July. So how do you know which ETF to buy among these four over here? So if you remember the rules, number one is to be above the 200-day moving average. So let's get out the popular moving average indicator. I'll change this to 200-day moving average. Okay, there you have it. Okay, so we have number one, GLD is above it, SPY is above it, commodities is above it, and bonds is below it. So we know that bonds is out already. So we just left three contenders: gold, S&P 500, and commodities. So among these three, which two should we be buying for this month? So this is where we need to bring out our rate of change indicator. Just look for ROC, or rate of change. Click on this. And this one, I'm going to change this to 12. Okay, and if you remember, this is a monthly time frame. We are looking for over the last 12 months, which ETF has increased the most in price over the last 12 months. This one, I'm just going to change this to a monthly time frame. And then at this point, I am going to look at the ROC value, the rate of change value, which is over here. So I'm going to buy the two strongest one for this month. So in this case, I can see that gold is 34. Again, you can use an Excel spreadsheet or a document just to write somewhere in case you don't forget. Gold is 34. Okay, you look at S&P 500, it is 13 as shown over here. And finally, if you look at DBC, which is commodities, the value is -1 over here. So this is no brainer, right? So this means that for this month, we need to buy two ETFs, which is gold and SPY. And this is the other two ETFs that we should be buying for this month if you were to trade this system. And how much of gold and SPY should you buy? Again, very simple. We are going with 50% position size and a maximum of 2 positions. So simply put, if let's say you have $10,000, you'll put $5,000 for this month in gold and $5,000 in the S&P 500 for this month. And that's it, right? This is the trading system, the exact trading rules. And this is why I said that you can trade this system in less than 10 minutes per month. Now let's have a look at the results of this trading system and see how it has fared since 2016. Oh yeah, one thing, before I get to the results, I also need to talk about the system. When do you sell the system, or when do you sell the ETF? So very simple, you only sell your ETFs when it drops out of the ranking. So if it stops being the, let me just go back to the rules. If it stops being the top 2 strongest ETF, you sell it and then replace it with the next strongest one. And of course, you also sell it if the ETF goes below the 200-day moving average, you would sell it as well. But let's say, for example, gold and the S&P, over the last few months, it has been very strong. So if you trade this system, you realize that for the past, I would say, 6 months or so, there's no trades at all because you're just consistently holding gold and the S&P, because when you keep rolling, or rather you keep scanning or running the system each month, you realize the positions is the same. You're still going to be holding S&P and gold. Let's say next month come August, and you do what I've just shared with you, you realize that S&P and gold is the ones that you should be holding for the month as well. But if you're already holding it, then there's no reason to sell. Just continue holding it. And if that's the case, you'll probably be done in like less than 5 minutes for the month. Okay, so this is a monthly trading system. Don't forget that. And now if you look at the rules, or rather the results, you can see this is the equity curve of this trading system. And if we drill it down deeper, you can see that since 2006, in case you're wondering why did we run this backtest since 2006, is because some of these ETFs, they are not available before 2006. So the earliest I could start is 2006, which is not bad because it's before the 2008 financial crisis. So you have the chance to, test this system on multiple crises like the 08-09 financial crisis, Russia-Ukraine war, COVID, etc. And for this system, 2006 is up 15%, 2024, the most recent year, up 26%, and we have a few losing years in between, like in 2011, and this one is 2015, and here as well, and here as well. And the losing years are pretty shallow if you ask me. It's just single digit losses. And later on, I'll share with you a trading hack, a trading tip that I think most retail traders do not know, on how you can actually reduce the number of losing years to just a handful, right? I'll share with you that technique later on. So this is the results, and if you break it down even deeper, you can see that since 2016, it's up about 535%. Annualized basis is about 10% a year on average. Winning rate is close to 60%, losing rate is about 40%. Your payoff ratio is 1.13, so this means that your average winners is slightly larger than your average losers. And maximum drawdown is 22%. Again, we talked about what is drawdown earlier, so again, go back and watch the video if you missed this part. And to conclude this trading system, the pros and cons for momentum trading, and in particular this ETF trading system, I won't say this is not a pros and cons for momentum trading in general, because momentum trading can be applied to stocks, and clearly the pros and cons will change accordingly. But for this system, the ETF one that I just shared with you, the monthly trading system, number one is that minimal time required. 5 to 10 minutes per month, it's all you need to trade this system. And in fact, I shared with you step by step how to actually execute it earlier. There's little correlation to the stock market, because even if the stock market is down, it's bearish, you could still be making money for the year. As you've seen earlier, you see the results earlier. Let's say we have 2008 financial crisis. This system is up 15%. 2020 with COVID, we are up 18%. 2022 with the Russia-Ukraine war, in this case, we're down 3%. So there's little correlation to the stock market. And the reason being is that even if the stock market declines or is in a bear market, this system can go into safe haven assets like bonds or gold, which, let's say, when the overall stock market is underperforming, other assets, if they are performing, this system will switch to those assets that are performing during those crisis period, during those recessionary period, and that's how this system can still make money even though the stock market is bearish. And the downside to this system, I tried to think about it, but really the downside could be there's really nothing much to do. For traders who want more action, you won't get much action from this system. And another thing that I added previously but I removed is that this system is, I would say, the returns are kind of like average. I mean, it's not like mouth-watering, wow, 20-30% a year. It's about 10% a year annual returns. Pretty average if you ask me, but again, this is not 10% for all types of systems under momentum trading, because if you apply momentum trading to the stock markets, your returns is going to be higher. So this is why I didn't put the returns average over here, because I didn't want you to think that momentum trading strategy, the returns are only average. So I removed that portion out. But for the ETF, this ETF systems, right, I would say that yeah, the returns for this system is kind of average, but you have to bear in mind, right, even though the returns is about 10% a year, not super wow, the maximum drawdown is pretty low. It's only 22%. So if you think about it, since 2016, I believe the S&P 500 have much deeper drawdown than 22%. So again, right, whenever we look at returns, we always have to look at it returns relative to the risk that comes along with it. Okay? Now, before you go, I'd like you to get access to this free training. You can get it at tradingwithrayner.com/go or in the description or in the comment section below this video. So in this training, you will discover 3 rule-based trading strategies that work, and they're all backed by data. In fact, the strategy that you've just learned is actually taken from this training. So you will learn, in other words, 2 more extra trading strategies. And again, I'll walk you through the trading rules, the entries, the exits, the risk management, and chart examples so you can quickly understand the concepts of these strategies. And that's not all, because I would also like to give you the PDF slides of this training, the trading strategies cheat sheets, so you can quickly recap the rules of this different trading system, and the backtest report of all these different trading systems, so you can see the winning rate, the losing rate, what is the payoff ratio, etc. All the backtest report given to you in this training for free. So everything is free over here. Just go down to tradingwithrayner.com/go, or I'll put the link somewhere in the description below or in the comment section below. Just click on it, you come to this page, and you can get started immediately. So with that said, I wish you good luck, good trading. I will talk to you soon.